let's get in some more market perspective and talk a little bit about some of the large cap mutual funds that are in favor. And we have Kaustubh Belapurkar, who is the Director Fund Research at Morningstar Advisor India, now joining in to talk a little bit more about that. Kaustubh, morning. Thank you so much for being with us in our new studios. Let's begin by talking a little bit about what exactly is happening when it comes to the large caps. It seems like they're clearly in favor right now. Which would be some of the key large cap stocks that are, you guys are watching out for?
Sure. So really there's been a fair bit of activity, like you said, because money's been coming in from retail investors to a very large extent. So you can see, the names that are coming up are actually some unusual names. So you had like an Idea Cellular that came up from the communication space purely because there was a QIP and a lot of managers, subscribe to that. But you also have names that have been cropping up, and SBI continues to see buying despite, the pressure on the prices after the PNB scam was unearthed. You have a Tata Steel coming in on the large cap side, a Power Grid, Bharat Petroleum, IT names like TCS, then another power utility like an NTPC. So I think the good part is that last year we saw mostly banks being bought. I think this year, that flavors change. You're seeing a lot of utils, basic material companies, auto stocks, technology stocks being bought by managers.
Okay. What's the sense that, the outlook is when it comes to the mid caps? Do you think that in terms of the overall valuation, it's looking a little bit frothy right now with the kind of volatility that the markets are in? And, with every expert that we speak to seems to suggest that, brace yourselves for a volatile roller coaster ride this year. What should one be doing when it comes to mid caps? Where are you seeing the churn?
Sure. So, I think very rightly said that managers have been very watchful in the mid cap space, not just now, but over the last 1 year, where clearly valuations did run up ahead of themselves, and there was a lot of exuberance that was being shown on some of the stock prices. So managers have been very, very selective in picking up counters, and you can see that. So obviously large caps remain the largest pie of what they're buying, but yes, select mid caps do see buying. So you can see, I mean, there've been a slew of IPOs in that canoe. So you had a couple that managers bought into this year, an Aster DM or a Galaxy Surfactants, where they have added positions. Similarly, you have a Triveni Turbines, a Voltas, where they're seeing value and and kind of buying on some of these counters. You've had some corrections on these counters in Feb, given the market's correcting. I think managers will continue to cherry pick mid caps. It's not going to be a all-in sort of trade. They will, they will be very careful about where they allocate money on the mid cap side.
Kaustubh, hi, morning. What about banks? PSBs aside, are you seeing large ticket exits even for from some of the large private corporate banks as well, the likes of an ICICI or for that matter an Axis, because there has been a fair amount of price correction there too?
Yeah, so Aisha, the interesting thing is that PSBs have actually seen buying. After the price correction, you see an SBI which was added a fair bit, a BOB's been added. Even PNB seen some minor additions. So I think the managers are sort of reposing that faith that yes, the price has corrected, and we want to get into some of these counters. There has been some profit booking on some of the private banks, Kotak Mahindra, IndusInd, Yes Bank. So I would say financials is not something that has been sold extensively. Yes, some counters have been sold, but the likes of HDFC, ICICI continues to see some addition. Axis Bank is another name which saw a fair bit of addition. So, but I think the enthusiasm with managers were buying in 2017, that's definitely come off because they've already loaded up in positions and they want to look at other counters or other sectors which are looking like better buys at this point of time.
From the last time we spoke, Kaustubh, there is also that entire correction played out in the metals globally, and it had its rub off on us too after Trump announced those tariff hikes for some of the importers. What is it that you're seeing within metals? Are people sort of running for cover? Are they profit taking? Because 2017 and even the start of 2018 has turned out to be a great year for the metals sector. There's sure enough proof that the commodity is in an upcycle, but are you seeing any capital protection within metals?
So interestingly so, as it's the other way around. I think they're betting on sort of domestic demand picking up, and you can see additions in Tata Steel, Jindal Steel and Power, Metals, Hindalco, SAIL, these counters are actually seeing additions. So metals saw a fair bit of buying in the month of February, which that's a trend. Surprisingly, so has continued last month too.
How are you looking at the overall oil and gas space? It does seem to be divided with, some of the oil marketing companies which have been seeing quite a bit of flavor of late. And what's your sense when it comes to the overall connection with the crude oil prices and some of the large cap upstream and downstream oil and gas companies?
Yeah, sure. So I think oil and gas has been, the interest has been limited over the last few quarters. We haven't seen any large additions as prior to the play that we'd seen last year, but clearly, something like a BPCL and HPLC continue to see some minor adding, nothing exceptional. But IOC is one counter we've actually seen selling in the previous month. So I think, like you said, it's a mixed bag. Okay. There is obviously a wait and watch and see where the crude oil prices stabilize around these levels, or do they continue to go up. So I think that's managers will take some time before they take a call to more aggressively sort of get back into these counters.
I'm taking a look at the data with some of the large caps sold by mutual funds, and there are quite a few banking names as well. There's Kotak Bank, IndusInd Bank, as well as IOC and L&T among the other large caps. So talk to us a little bit about the churn. I know you've spoken in detail about the banking space as a whole, but what is the kind of churn that you're seeing happen when it comes to the large caps as a whole? Where is there now more concentration?
Sure. So I think two things have happened. One is because you had that fantastic run up in January on the large cap counters where clearly the large cap, a lot of them stocks moved up quite significantly. Managers don't mind taking some profit off the table on some of these counters. Obviously, you've had a correction in Feb, but you've still made a healthy amount of money over the last year or two. And like I was saying earlier, is that that focus is now slowly shifting. So you can see a lot of buying happening on power utilities, commodities, basic materials, cement. I think that action is coming back from managers very selectively on technology again. We're seeing that shift happening. So banks are no longer the darling of the street from where I look at it. From fund managers' perspective, that trend is definitely changing.
Okay, that's a view coming in on the large caps as well. And how are you looking at mid-cap IT with now, a sense that we are seeing a focus on digital? We are seeing, a likely improvement in the overall earnings that's anticipated in the coming quarter. What's the outlook on IT based on the kind of management commentary as well, the way the currency is shaping up?
So IT again remains a very, very staggered play.
Okay.
I don't think too many of the mid-cap names really have gotten too much buying. The one name that pops up was Cient that was seeing some buying, but beyond that, I think we've largely seen buying on some of the large cap, and Infosys particularly was that one sort of counter was seeing a lot of activity. TCS has been playing a little bit of a catch-up now, but Wipro still remains a flattish sort of bet for managers. So I think it's going to be a very stock-specific play right now. It's not going to be broad-based buying from managers as yet.
All right, we'll let you go on that note. Thanks very much, Kaustubh, for joining in and giving us a flavor of what's going on with some of the large and mid-cap additions and additions in the mutual fund industry.